Yo, what's up? This video I want to talk about um growth stocks. So talk about dividend stocks. Now we're gonna talk about growth stocks. So essentially a growth stock is just a stock that outperforms the market in general and other companies. So let's say the market's going at an average pace of 15% a year. So we have the market at 15% per year. And then we have a company, I don't know, let's say XYZ company. XYZ company. So the market's going at a rate of 50%, other companies around that. And then we have this company right here, which is moving at a 30% growth rate. This would be considered a growth stock because it's outpacing the market. And usually companies like this, um, usually have a competitive advantage over other companies. So let's say XYZ, competitive advantage over all the other companies. And anything this can include patents. This could include this could include economies of scale. This can include new innovative ideas. This could include new products. So like the list goes on. Any of these, anything that basically differentiates them and puts them as not an essential company, but it basically differentiates them from the market. Um, and these companies these companies tend to be introducing a new product to the market. So introducing new products to the market, such as like we can use the example of Netflix, for instance. Netflix was a growth stock. Why? Because they introduced a streaming service. Because before that, you originally had to go to what was it called, Blockbuster, I think, to physically buy discs and put them in your to watch them on your TV. And then Netflix came along and they provided a streaming service, which is a new product. And guess what? They outperform the market. I don't exactly know what Netflix is valued at right now. I think it's like I don't know. Let me look. I think it's 800 maybe. 710. Okay. It was 800 or sorry, no it wasn't. 710. So, yeah, it was a growth stock because it introduced a new product to the market. And I mean, everyone watches Netflix now, so obviously it would outpace the market if it's a new product and people want it. Typically, though, these companies there's three things about these companies. Typically, they don't pay dividend. Typically, they have very loyal customer bases. And the last thing is that their products are differentiated or unique, um, such as, like I said, Netflix streaming service. Obviously, we have HBO and Amazon Prime and all that, but Netflix was the first to do this, and they revolutionized the like the movie industry essentially, which is why obviously they're a growth stock. Um, and then how do you pick a good growth stock? How do you pick a company that's going to quote unquote outperform the market? You have to ask these questions. Is the company going to continue to grow? How is the company unique? What are people's opinions on the company? And how much does it cost to buy a share? These are all good questions to keep in mind if you're looking for a growth investment, because obviously, you want the company to continue growing. You want the company to have a differentiated product. You want the opinions about the company to be good, and you don't want it to be too overpriced per share. Um, Something to look for within growth stocks is the PE ratio or price to earnings ratio. Typically, growth stocks will have a very high PE ratio compared to other stocks, such as dividend stocks or just indexes in general. And you want you want to use the PE ratio to look for to make sure it's you know outperforming the other stocks. So I can show you guys an example. We could use Netflix. I'm not sure it's considered a growth stock now, but um, but I'm not sure it's considered a growth stock now, but I can show you an example of it. So go back to 5 years to all. All right, let's look from what we'll do from 2014 to 2015. We could even do 2016 to 2017. So what did it start at in 2016? $100 about. And what did it end at? 140. That is a 40% gain within a year. Now we can look at the S&P, go back 2016 to 2017. All right. So 2016, where did it start at? 2040, let's just say. 2017, 2,250. Obviously, it's a less percent gain than Netflix. So Netflix outperformed the market because they were providing a differentiated, unique product. So it's also good to have growth stocks, especially if you're young and you could risk, you have money to risk, because there is a possibility of giving you a very high return compared to the rest of the market. Um, so growth stocks are also an excellent thing to add to your portfolio if you're looking for high exponential growth. But you got to pick the right ones. You can't just look at some random ass company and then say I'm gonna put my money in this and it's gonna 10x. But like I said, it is a very good strategy to diversify your portfolio and to increase your gains. Obviously, it's not the same as dividends. You're not going to be getting month or quarterly payments, but most likely your investments within growth stocks will increase more than, let's say, dividend stocks or indexes. But yeah, that's what essentially growth stocks are, and why you should, if you're able to, risk a little bit of money in growth stocks.